I think what's a little bit different from some syndication is that in this case, the investor is buying securities of that project, so they couldn't put a lien on the construction company, for example. That won't happen through how our company operates. But what we do is we make sure that we're dealing with real estate investors that are a little bit more sophisticated.
Welcome to the Share the Wealth Show, where minority professionals can learn to escape the racial wealth gap and catapult themselves into abundance. Your host, Nicole Pendergrass, grew her net worth from being negative to multiple six figures. Join her on her investigative mission to expose secret strategies of the wealthy so we can all have the tools needed to build the life and legacy we were created to possess. Now it's time for the show.
Hello, everyone. Welcome back to another episode of the Share the Wealth Show, the show where we talk about how to build, grow, and protect minority wealth. So today we have with us Miss Vontenea Stokes, and she is the CEO and founder of Secure Living, which is a financially regulated real estate funding platform. So it's a crowd fund. Oh, and I love it so much because a crowd fund is where you can come in, you can be sophisticated, non-accredited. You can come in with all different types of investment minimums, depending on, we talk about what that is in the show. So you need to listen depending on your income or net worth. But even if your income and net worth aren't at a certain level, you still are able to invest. And she also hosts this for real estate professionals and operators if they want a place to start helping to raise funding. So it kind of works on both sides of the platform. It's for the operators to get on her platform, and it's for the individual passive investors who want to start growing their wealth. So the company's mission is to make real estate investing more affordable and more accessible to the average household. Now, doesn't that mission sound so much like what I talk about all the time? Oh, I love what she's doing. And she wants to provide alternative funding to real estate professionals. As a real estate investor herself, she experienced firsthand the challenges of getting started with real estate and acquiring the capital to do so. So she ditched her comfy 9-to-5 and focused all of her energy in creating more equitable investment opportunities for the average person. This year, Secure Living became registered with the SEC, which is the Securities and Exchange Commission, and is a member of FINRA. So this episode is just great. It gets to the core of the mission that we have here at Share the Wealth and with my own real estate investment company, Noir Best. So I need you to listen in. I need you to reach out. She leaves her phone number at the end for you to call her. Please do that. Please call her. Please follow her. Get on the website, sign up in the portal, so at least you will be notified when they have more funding opportunities and you can see how much you're able to put in each year. So in any case, stay tuned and enjoy the show. Listen, I know you've been digging in, studying everything you can, listening to all the podcasts, reading all the books, even going to meetups. You basically have a degree from YouTube University, right? But you still feel stuck. You don't know how to actually implement what you've learned. You're nervous about taking the next step. And with the economy like it is, especially with a downturn looming, you're even thinking maybe you should just wait it out. I know you've heard that real estate makes more millionaires than any other asset class, but you know what else? More millionaires are made in a downturn than any other market cycle. So now is the perfect time to jump in and really get started. I'm super bullish on growing my portfolio this year, and I don't want you to miss out. So I've decided to start the Microfamily Investing Accelerator. This is a mentorship program where I personally guide you through my 5 proprietary pillars so you can learn how to buy your first commercial multifamily property and scale while not biting off more than you can chew by focusing on 5 to 20 units. That's what I call microfamily. And so you can also get hands-on guidance from an experienced microfamily investor, me, who's been right where you are. nervous about how to start. And so you can also create the cash flow needed to give you freedom and options to build the abundant life that you were destined to live. So I'll be limiting the first cohort to 5 students because they'll have direct access to me and I will be heavily invested in their success. The first group is going to start in January. So if you're ready to grab 2023 by the horns, schedule a free discovery call with me today. The link is in the show notes. Let's hit the ground running in 2023. I look forward to seeing you on the inside. And now let's get back to the show. In any case, I'm just super excited to have a conversation with you today because this is one of my biggest kind of missions, right? Is to bring affordability and accessibility to real estate investing. But before, I'm going to jump far ahead. I don't want to jump too far ahead. Tell everyone a little bit about your background and your journey to getting to what you're doing now and what you are doing now, because I haven't spilled the beans yet. Go ahead.
Okay, yeah, sure. So first off, thank you for having me. Glad to be here and I love your content. So really excited just to be able to speak about what I do. My name is Vontenea Stokes. I'm the CEO of Secure Living. We are a real estate focused funding portal. So we help real estate professionals, real estate investors who are looking for capital. We help them fund their projects using investments from the average individual or the crowd, let's say, if you want to look at it as a method of crowdfunding. So we help them offer real estate securities. And then on the other hand, we help the average person invest in real estate. So you and I, we share the same mission in that way. So I was really pumped when we connected and had a conversation, and now here we are. And how did I get started with this? So let's go back to the very beginning. I first invested in real estate shortly after college. So I was working a W-2 job, was able to save a little bit of money, and then was able to partner with actually a family member who, was in real estate. And with that investment, I was actually able to pay off my school loans. So I was like, okay, the wheels are turning a little bit. I didn't have to use all of my own cash. I didn't have to have all the knowledge because I partnered with somebody. And that really kind of just was like a stepping stone for me. So fast forward, I'm still investing in, some properties and was able to have family fund some of my deals. So we partnered together, and I'm like, there's so many people that want to invest in real estate, right? They may not have the resources, the time. They might not have $70,000, $100,000, but they have 5, they have 10. They can contribute a little bit, and that's really what kind of kickstarted the journey to start Secure Living. And all the research that goes behind how can I legally get people, involved in real estate and kind of issue those securities. So that's kind of, a short story where I got to where I am.
Okay, perfect. Yes. And people, please know when you see individuals offering opportunities, there is a lot of legality that goes behind that. It's not just like slap something together. There are legal protections and regulations that we have to go through and abide by if we don't want to go to SEC tax jail or wherever else. But okay, so I want to actually rewind a little bit. So before we get to the very first investment you did where you paid off your student loans, what even got you thinking about real estate as a method or something that you wanted to be involved in? What did you go to school for? What were you thinking you were going to do?
So I went to school for business. So I have an MBA in business administration, a focus on marketing. And throughout my career, I was able to work in the field of marketing, which I like. But I think when it comes to real estate, you see a little bit of freedom, right? When you get that, that income flowing in, whether it be, monthly or whether you have some fix and flips that you sell and, build up your net worth. But for me, it was always about having the freedom and maybe give myself a little bit more flexibility, not really have to rely solely on one source of income. So that was always a target to get involved in real estate, even though I didn't know how it was going to happen, right? It just so happened that there was an opportunity that I was able to kind of jump on the bandwagon. So that was really a blessing.
Okay. And so how did you even get introduced? Did you like always know investing in real estate was possible? Because I know when I first got introduced to it, because I thought that was something that like big corporations and businesses and people did. Like I didn't know individuals could actually do it. So once I found that out, then I was like, oh, this is for me. But I had that moment, did you ever have that moment? Or I know you said it was family. So were you just always around that as a possibility? Like you knew it was possible?
I did know it was possible. I just didn't know it would be possible for me. Let's put it that way. When I was younger, I dabbled in the stock market. I still do, but then I didn't really know what I was doing. That was more accessible to me, in my mindset back then. And then I realized, okay, real estate is accessible to me too. And that's what I want to do, make it accessible for others as well.
Okay. What was that first project? Was it a flip?
It was a flip. It was a flip. Yeah. And it was interesting, like all kinds of deals pop up. We knew somebody, and the property was going to be foreclosed on. So we were like, you know what, we can help this person save their credit. We can fix up this property, get the proceeds, and then they can walk away, kind of free. Let's put it that way. So it ended up being a fix and flip. Yep.
Oh, okay. And then you say you got involved with other family members on other projects, just continuing the real estate investing. Were those all flips too?
No, some of those were long-term holds. And then those family members ended up getting purchased out during a refinance type of situation.
Okay. So all right, now we can fast forward back to with Secure Living and what you're doing now. So how long when did you open Secure Living?
So as of March this year, we're financially regulated by the SEC and a member of FINRA. So that allows us to operate throughout the US, to take investments from US citizens over the age of 18. And of course, to, on the other hand, work with those real estate professionals looking for funding.
Okay. And so you actually have a deal on the platform now, right? How did you meet the operators of that deal? Or did they have to like apply, or did you already know them? Like what's the regulations for a deal to be eligible to be on your platform?
Okay. Yeah, that's an excellent question. So I am talking to real estate investors all day, every day. So whether it be LinkedIn or referral or any other social media platform, that's one way to just get connected, or just, people that I already, have in my network. Also, we do have a process where people we don't know can submit deals on our site. So there's a form for that. I think this company particular, I think it was via social media. I think maybe even Instagram. And then we had been kind of communicating with them for 6 months or so to kind of see, which deal would be the right deal to host on the platform. Of course, for us as a company, we don't accept every opportunity. There's a vetting process. We want to make sure that it makes sense for investors, that it makes sense for us, it makes sense for the operator, or the issuer or sponsor. We use those terms interchangeably. But that's kind of how we got connected with them and then started the vetting process. Okay.
So can you, I guess, tell us a little bit about what this opportunity is, and if people are interested in it, how do they get involved? Like, what does that look like? Are there return projections already there? Give us the nitty gritty.
Yeah, sure. So this deal is located in Houston, Texas. It is 4 townhomes that are being constructed from the ground up. So the operator is called CSF Construction. They've bought land all over Houston. Some of their projects are much larger than this one. Some future projects they have, but this is, what they're working on currently. So they are anticipating a 8% ROI. They're offering debt in the form of a promissory note. The holding period for investors is 8 to 12 months, so a shorter time horizon. And the easiest way to get information about the deal is to go to our website, so www.securelivingrei.com. And there is an invest now button that'll kind of take you to what we call the marketplace page. So what we envision is, our site will be like when you go to Amazon and you're browsing for an item, or if you're shoe shopping, you can really pick and choose the investment opportunity that fits your needs best, whether it be the ROI, the time horizon, whether it's equity or debt or some other type of issuing. And when they hit that invest now button, they'll be taken to that offering where they can see all the details, about what I just mentioned, the terms of the offering. In addition to the market, they can see information about the company, who's behind it, who's running the show, past projects, to get like a holistic picture. So our goal is to really make real estate investing simpler. So we package together all the information so people can really get a comprehensive view of what they're investing in, or what they want to invest in. And there's also an option there to contact or leave messages directly for the operator. So you have that communication back and forth. So it's pretty good.
Oh, I didn't even know that, because I know with syndications, you are speaking directly to the operator because they're raising capital. And then at the same time, like, you have access directly to them. But I didn't realize through like a crowdfunding platform, I always felt, and that was just my limited knowledge, that there was like this wall, like the crowdfunding platform was the intermediary between me and the operator, and I wouldn't have access to the operator through a crowdfunding platform. But you're a crowd, and I don't know, is that normal for a crowdfunding platform?
That's normal, and it's actually regulation. So something that we have to do, and also something that we want to do, because we want to provide that transparency and have people be able to reach out directly and say, "Hey, I got a question about XYZ," and that operator respond. It just adds a level of comfort and confidence. Yeah.
Okay, so it's like I wanted to like hop on a networking call with the operator just to get to know them and kind of feel out their personality. That would be potentially possible by contacting them through the portal.
So basically, there's a few ways that investors could get updates. So one, of course, we just provide updates. So there's an update section where we would add information about the project, any videos, things like that. Of course, we also do monthly newsletters to give updates about projects, so investors will get updates that way. And then there's the comment tab at the bottom of each offering. So that would be where an investor could leave a comment and have the operator or the issuer respond.
Okay. And then with this offering particularly, it's debt, you said. So someone's going to get that guaranteed 8% return. What happens, because I know all real estate, investing in anything, there's always a risk, right?
Absolutely.
So what happens if for some reason they don't fulfill their promise? Because I know if you're getting debt on other types of real estate, normally like you're basically in the position of the mortgage company. You have like the first rights of being able to take over the property and blah, blah, blah. So how does that work? Especially if it's ground up construction, I would assume the buildings would be done by then. Are there any claims for the investors against the property if they don't get their 8% and then their payout in the 8 to 12 months or whatever?
So exactly. I mean, you explained, debt, the way it works in the form of a promissory note. So this is, contractually in the operating agreement or subscription agreement. There is that section in there. I think what's a little bit different from some syndication is that in this case, the investor is buying securities of that project. So they couldn't put a lien on the construction company, for example. That won't happen through how our company operates. But what we do is we make sure that we're dealing with real estate investors that are a little bit more sophisticated. And what we discuss are alternative ways where investors could get their money. Let's just say in case of, build to sell construction, and maybe they decide, okay, they didn't sell for as high, or it won't sell for as high as they thought, then they could refinance, then they could turn it into a hold. So there's some, let's say, contingencies or other strategies that could be implemented to safeguard the investor.
Okay. All right, perfect. Are you looking for other opportunities that might be equity, or are you going to stick mainly to debt? What types of properties is your crowdfunding platform looking to start acquiring?
So this just happens to be debt, but we also have an equity project that we're onboarding currently with a company located in Charlotte, North Carolina. But we also support profit sharing and convertible notes. So we like to keep it flexible for, the real estate company, for the issuer. So they have, options to issue those securities in a way that fits their company best.
Okay. So convertible notes, explain that.
That would be, for instance, if a company is issuing debt and then they decide, okay, actually, at some point in the future, an investor can convert that debt into equity. So that's, a possibility. Or with profit sharing, the issuer is saying upfront how much of the profit they're going to share with investors. So yeah, there's some different strategies that can be implemented.
Oh, okay. So is that something like the operator would decide at a certain point, like, oh, I think we're going to exchange or convert these shares into equity from debt? Or is that like up to the individual investors if it happens to be a convertible note type of deal? Does the individual, like the passive investor, decide that? Or is that something that the operator has to open up to everyone?
So we require that in the beginning, the operator does specify the type of security. So debt, equity, convertible notes, for example. But when it comes to convertible notes specifically, at that specified time, the individual investor would decide, okay, I'm just going to take the debt, get my 8% or whatever. Let's just say it was 8%. And run with it, or they could decide, okay, I'm going to convert this into equity.
Okay. I'm asking all these questions because I'm very interested, and I don't know how the inner workings of crowdfund works, but this is great. I'm wondering else, like, I know you are, let's convert a little bit. I guess I want to get into kind of your, not personal life, but like, I know that you are a mompreneur.
Yes.
Like moi. Do you want to say anything about that? I don't want to put your, I
No,
guess
that's fine. Yeah, sure. So I do have a 6-year-old daughter, my first child. So that's been exciting, managing everything, and very challenging. Just being a little bit naive to motherhood, I thought I would have more time. So it's complete opposite, but I do have a great support system around me with my family and my husband. So, at the end of the day, you just get it done. You go out and you get it, and you do what you need to do, and you take care of your family. And yeah, I think, working moms are like superheroes juggling all these balls, and it works.
Okay. Yeah, that's what I really want to get into, was just like how, because I get that question a lot, like, how do you do it all? How do you handle young, I guess, basically in my head, they're still toddlers, even though I guess 5 or 6 is not really a toddler anymore. But in any case, it's like that in between stage. I don't know what that stage is called. But how long, since your daughter is 6, when did you?
6 months. 6
Oh,
months.
6 months. And I thought in my head, I was like, I thought you just had a baby.
Yeah, 6 months.
I was like, maybe I didn't know about a 6-year-old. Okay. So yes, I was gonna say, how long have you been working on the business since your daughter was born? But of course you have, because your daughter's 6 months old. But before that, what was your kind of thought process around building a family and having this business? Like, when did you first even have this idea? So I know you guys got, officially regulated earlier the year, but how long before? Because there's a lot of back work that goes into getting to this point. How much time have you spent just like putting the pieces together, and how did that fit into what you thought like family life would be like with juggling, running a business?
Sure. So, that deal I talked about where we had family and friends fund some of the project, that was in 2020. So after that was successful, we were able to return around 20% to them on their investment. So that's what, when I say we, my husband and I, so that's what kind of got my wheels turning a little bit about, okay, how can I really, how can I open this up to other people? That is the goal. I want people to be able to have other sources of income, be able to build wealth. So I looked into having a fund at what you're looking into. Then I learned about some of the regulations about having accredited and non-accredited and, investors and, how far you can go outside of your network. And because we didn't want to really limit any non-accredited investors or kind of, worry about the different caps associated with that, that's when crowdfunding kind of came about. So it's been a process, especially, for me, what I envisioned this to be in the beginning is a little bit different than reality. And that's fine. I think when you are starting a business or starting any type of venture, you kind of meet those forks in the road where you say, am I still going to push forward this way? There's some stumbling blocks here, but the road is windy, it's not straight. And then you just stay on that path.
Yeah, definitely. And I've been talking about that a lot recently. And I don't know why, that's just on my heart to just always be, I feel like I'm preaching at people. Like, come on, everything is hard. You just have to pick your heart. Like being comfortable right now is going to be hard for you later, or you could be hard on yourself right now and make yourself live more comfortably later, and then there's in any decisions and any goals that you have, there's always going to be roadblocks. It's not going to be like step 1, 2, 3, and now that's it. Like there's always something that comes up.
Absolutely.
Some people can handle that better than others. You said that something was a little bit different in how you envisioned it at first than what is actually reality. Do you remember what one of those, like an example of something you thought would happen that's not how things work?
Well, originally I was thinking about a fund and until I realized, that we really couldn't have that many non-accredited investors. So that's a lot different than what I had kind of set out to do. That's one of the main things.
What was the goal? What did you set out to do?
Well, originally I thought, okay, with a fund, we can target whoever we want to target. And that's just, not having all the information, but you don't know what you don't know, and then you know it, then you learn it. Yeah.
So what's your like 5 or 10 year plan for secured living? So I know you want to be the Amazon of real estate opportunities.
This marketplace, exactly.
I love that, like a real estate investing marketplace. How many deals do you envision having on your platform at one time? How much equity from investors do you envision kind of raising or bringing that opportunity to? Like, what's your overall like big picture plan for it?
So we look at transactional volume. So like how many investments we've done on the platform. So just like short term, next year, we want to be somewhere between, 9 to 12 million funded. And long term, a big goal for us is to transition into becoming a broker dealer. So right now, we're not able to list our own projects in our portfolio because it's a conflict of interest. But when we become a broker dealer, we'll also be able to, list our own projects in our own portfolio. And that's something that's a long-term goal for us, maybe in the next 3 to 5 years.
So once you become a broker dealer, are there certain different regulations you have to meet in order for that to now not be a conflict of interest?
There's some licensing that's required.
Okay.
So there's actually, let's say, a little less regulations, also with marketing and that sort of thing, because you do tend to have a little bit more accredited investors. So, we know what the SEC thinks about accredited investors being more sophisticated, right? So whether that's true or not is neither here or there, but that does influence the regulations for broker dealers.
Is there anything that I haven't covered that you want to still share about like what you're doing, the project you have now, like what you maybe need to help you move to the next level. Maybe that we have a listener out there who actually, you know what, that's one of my final questions. I might as well do it now. But
Okay.
maybe you have a listener out there who is plugged in to maybe a resource that you might need. So for secured living's next step or the next goals or whatever your big picture goals, what is the number one thing you need now to take you guys to the next level?
So we are always looking to expand our network. So both with individual investors and also with sponsors or issuers, those real estate professionals who need funding. So right now, we're talking to as many people as we can. I'm just trying to get people kind of, plugged into the company, whether it be, to sign up for our newsletter, or, we're scheduling calls just to kind of build those relationships. And that's really a phase that we're in right now, is that relationship building. So if anybody is interested in crowdfunding for real estate securities, then they should definitely give us a call.
Okay, so you have a newsletter. Now I need to sign up for that so that I can be kept abreast of when things are happening.
Definitely.
Because I'm still going to keep in contact with you anyway. And I'm going to start connecting you to, all the people that I know. I know we talked about that before, but I just love this as an opportunity, especially because like you're saying, all the things I've been starting to do research on funds, and I don't know, it is a lot more complicated than you think on the surface, especially just depending on what type of regulation you go with, who you can and can't let invest in your fund, depending on the type of regulation. There's a lot that goes into that.
Yeah.
So I think you decided to go with the crowd fund. So now what's different with the crowd fund than a regular fund when it comes to, because with a crowd fund, you are allowed to raise from non-accredited investors who and you can raise publicly. Okay, so that's what I want to say. So with the 506C regulation for funds and syndications, those are only for accredited investors, and you can advertise publicly. So if someone's not accredited and you see all these deals, floating around, you're not going to be able to invest in that because you're not accredited. In order to find out about the accredited deals, you have to be, on the non-accredited available deals, you have to be on someone's email list, you have to have a personal relationship with them, and it can't be publicly advertised. So unless you're actively going out there and meeting operators, you're never going to find out about the deals that you can actually participate in. And that's what I try to break down to people all the time so that they know, like, if you're non-accredited, please get out there, start having conversations, meet people. But you are allowed to raise non-accredited and do it publicly. So why is that? What is different between what I guess the requirements that the non-accredited investors need to have in order to invest? Are there any, what's the limitations?
Okay. So basically what happens when somebody registers on our site, they're going to set up an account, the basic information, if you were setting up any brokerage or bank account. And then there's the next phase where it's going to ask if you're accredited, yes or no. So this is a requirement that we have to ask. Basically, if you're accredited, you put yes, and there's no limits on your investment amount. But if you are non-accredited, so you put no, it's going to ask you your annual income and your net worth. And basically, the SEC has put in some safeguards to protect the investor. And we also think that this is beneficial. Obviously, if somebody makes $50,000 a year, we don't want them trying to invest $20,000 a year. That's not very wise. So there's some automatic messages that the investor will receive as they try to invest on their investor limits and what their max is for the year. So I think that's kind of one of those main differences, as it safeguards the investor. And another area is really in marketing. So we are impartial when it comes to the deals on our platform. Obviously, we've vetted those professionals, right? We've vetted the deals, we've looked at the market, we looked at the ROI. So we present those offerings impartially. So we don't show favoritism one or the other. So we have a little bit more restrictions about what we can say about the deals. But what we do is we help those operators or those issuers to market their projects as well. So it works best when it's a joint effort, right? We have a network of investors, but they also need to bring their network as well. That's, when the deals are most successful.
Okay. So back to the net worth and income requirements. Is there like what's the percentage? Is there a certain percentage of that they're allowed to invest annually? Is that what the limit is?
Yeah, exactly. I believe it's 10%.
Okay.
And it goes off 10% of whatever's higher, the net worth or the net
Or
income.
the annual income.
Yeah.
Okay. Okay, that makes sense. And I guess that does get your feet wet and get you used to like investing without throwing the bag at the I don't know. I don't know what analogy I was just saying. Throwing the cat down the drain. I don't know. Whatever.
Yeah.
You guys know what I'm talking about.
It
The
gives
child out with a dirty bath water, something like that.
Yeah, it gives a little room to be able to play a little bit. Yeah.
Yeah. Okay, cool. Nice. Oh, this is so good. This was so much great information. I'm eating it up. I really hope we will have all the links to be able to check out Secured Living's website, to connect with Vontenea if you want to even especially to look at the deal that's on the platform now and see if that's something that you want to be involved in. Like they did a lot of due diligence, but you also have to do your own due diligence and sit and look at the deal and make sure, where it's at, the timeline and all that stuff kind of aligns. And I think this first one being something that's like a shorter time frame, because most like syndication and apartment deals are like, 3, 5, 7 years, but this being like 18 months to a year. How is that? What's the time?
Yeah, 8 to 12 months.
Okay. Look, I already extended it in my head, but yeah, that's definitely even better, I think, because you're getting that 8% return in this environment, where just monetary and policy, all this stuff is just going crazy. So at least you can have your money working a little bit better for you.
Absolutely.
Next year.
Yeah.
But yeah. Wait, don't go yet. Have you been looking for a way to get started in real estate investing, but you just don't know how? You need the Launchpad. It's brought to you by my company, Norvest Holdings. And the Launchpad is a free guide with a ton of resources I've compiled to help you invest into your first real estate syndication. It includes terminology, book resources, video explanations, all the information that you need. Don't know what a syndication is? I got you covered. How to find a good operator, how to even tell if a deal is good or not without having to know how to underwrite it all. It's all in there. The Launchpad is designed to help launch you into the next stage of your investing career and get you invested into your first multifamily syndication as a passive investor, meaning you can be a landlord and own a piece of a large apartment building, but still go about your day-to-day life without having to stop and learn every single detail about what's under the hood and how it all works. The link to the guide is in the show notes. Make sure you sign up today. Again, this is a free resource and guide. And if you have any questions at all, please feel free to reach out to me. Now let's finish up the show. So this is perfect. Okay. Actually, we're going to get to the final, I don't know what this is called. I just keep saying the final 3, and I think it's more than 3 questions now. The final portion of the questions that I ask every investor or every guest on the show. So the first one is, Warren Buffett said that diversification is protection against ignorance. What do you think that means? Is that good or bad? What was he trying to get at with that?
So I absolutely agree that diversification protects against ignorance. We also just don't know what the market is going to do, right? So it does provide a little buffer in there. So I think it's good to be diversified amongst asset classes, asset types. I do think that statement could be expanded upon a little bit. Another thing I think that's important to think about when we talk about diversification is the investor's age. We don't want, or let's say, I think it's a little bit unwise if a 30-year-old is invested 60% in bonds, let's say, or if a 65-year-old is invested 70% in stocks. There, in some ways, that can also increase the risk. So I just think that time horizon and person's age is also important to think about when we talk about diversification.
Nice. Actually, you are the first person to actually input that extra tidbit, which I think is super smart. The age and your risk tolerance definitely
Mhm.
informs the type of investments you're going to be and how diversified you're going to be. Okay. In the game of Monopoly, you played Monopoly before?
I have. I can't say that I've finished a game, but I have played many times.
It's so long. It's so
Yes.
long. I haven't played in years. And then like a year or two ago, I was on vacation with my family, and I guess my brother and his family, like wife and kids, they play Monopoly all the time. And I was like, they wanted to play. So I was like, all right, we're on vacation, but I just already know, oh, this is like a 3-hour game. Like I don't have
Start
3
early.
hours here. Like I had to end up just like, I had to end up, I don't remember if I finished either. I kind of got almost to the end, like the last round, but then my butt was hurting on the chair. It's too much. Okay. Anyway, I digress. All right. So Boardwalk or Baltic, what's your first buy to win the game, your strategy? Why are you doing that first?
Okay, my first buy would definitely be Baltic.
Okay.
I think, investment strategy should be scalable. That gives you, some room to learn a little bit, to mess up a little bit, to make some connections with other folks. So I think that's a good way to go.
Okay, I love that. Nice one. Other question. This is a new one. What does wealth mean to you?
What does wealth mean to me? Wealth takes on a lot of different facets. One, I think about, a physical person's health and well-being. I think that's of the utmost important, especially, when you talk about wealth, it's not only about, money. You need to be healthy and insane enough to do something with it. But also a lot of people, I think, use the terms rich and wealthy sometimes interchangeably, and that's not really, they're not interchangeable. For me, wealth is generational, having something that you can pass down, having a solid foundation, safeguarding that money. I know that, or those assets, that's something that you've talked about on your show before. And I think all of those kind of encompass wealth when we talk about generations down the line.
Okay, love it. Great answer. Okay, I asked you about taking your business to the next level because I was being, forward thinking, I guess. And then I guess the last one, can you tell your listeners how they can reach out to you?
Okay, perfect. So we're on LinkedIn, Instagram, Facebook at Secure Living REI. The website is also securelivingrei.com. Or also you can just give us a call, right? We love to hear from people. We love to talk to people. We're located out of Charlotte, North Carolina, and that number is 704-562-0019.
Oh, the phone number. Now, who is going to actually pick up the phone and call? That's what I want to know.
Let's see.
I need you to tell me who calls and says, I heard you want to share the wealth show. I really need, please call her, people. I need to know that you guys are taking action. Okay. Thank you.
Thank you,
so
Nicole.
much for coming and sharing all your information and sharing the wealth. Oh, I love it. I love what you're doing so much.
Thank you. I appreciate it. I appreciate being on here, and I look forward to seeing what you're going to be doing in these next few months and years.
Thank you. Same here. And we will definitely be staying connected.
Okay,
all right, everyone.
Awesome. Did you love this episode of Share the Wealth Show? Be sure to connect with Nicole by following her on LinkedIn, Instagram, or Facebook. If you picked up any of the gems that were dropped by today's guest, make sure you not only put them in your bag, but if you know of someone who would benefit from this information, don't keep it to yourself. Share the wealth and make sure to leave us a rating and review. We'll see you for next week's episode. Subscribe so you'll be notified.